welcome back to Golden Rule Radio. We're watching the markets move today. We have the dollar index looking like it's going to close at about a 2-year high, above 898 if it closes where it is right now, Wednesday as we're recording. We have the stock market coming down, as we noted last week about it failing to break to new highs. We have gold holding well. Silver has come down a little bit farther and is bouncing back up. Tori, I see a lot of paper on the desk over there. What's cooking?
Well, some of that is because Miles isn't here today, so we're filling the void. But I'll tell you, before we jump into the details too, we have 4 perfect solutions in terms of the precious metals right now. And call us and we'll walk you through what those are. But one of them includes the sleeping giant in silver. We have a particular product that gives you a double play in the ratio and the premium. So just give us a shout at 800-525-9556. It's not even printed up yet, but we'll share those details with you. And then I want to jump into listener questions real fast. We had a really good point brought up last week by B. Swick 1111, who said, have a look at what silver does when stock markets crash. Silver crashes too. When the Dow crashes 50%, silver will fall 15% easily. That will be the time to buy if you can get it and dealers are willing to sell. Robert, you and I were both here in 2008 when silver did exactly that. Why don't you answer that question?
Sure. So silver did come down, the price of silver, spot price of silver. However, a lot of the items that are actually silver, real silver, if you can believe that people actually buy real physical silver, a lot of those items didn't follow it down as the spot price came down from the mid-teens, about where we are today, down to $8-9 spot price. You couldn't buy junk silver for less than about $13. You had premiums on silver eagles in the $15-16 range. So you didn't even have the ability to buy the real thing when the price dropped with the market. So yes, that's what did happen. However, I'm not so convinced that that's going to happen on this next crisis that we're ultimately going to have.
I totally agree. And so now is the time to step in because as the listener points out, if dealers are willing to sell or if you can get it. The other problem that we ran into back then was literally an unavailability of a lot of product, including 100-ounce silver bars.
Correct.
Silver Eagles, 40% premium. I remember thinking, who's going to overcome that? Eventually you did if you sold in the $30 to $40 range. But that was really an interesting phenomenon. So I appreciate you bringing that up. Just don't even wait. Get it while it's easy to get. And we're looking at both a ratio and a spot price motivating market right now, where you really do have the guesswork taken out for you in entry point.
So even though on paper you had the silver price coming down, it actually provided some of our best ratio trades, our premium trades, with some specific items. I remember being able to sell some silver dollars at quite a bit of a premium and increase my total ounces.
Well, and that just shows that there's a lot more to gold and silver investing than the spot price. So speaking of spot prices, we look at the charts here and break down, do our best to represent Miles. Not a whole lot has changed in terms of the support and the resistance levels that we're looking at. Gold's sitting in the middle of the channel here, and we really, the dollar, yes, it's at a 2-year high, still relatively flat in its channel, and gold is doing exactly the same thing. So with that current price of about $12.81 at recording here today, we were here 2 weeks ago when we were recording. And so a little bit of flat action, but down to the downside. We've been calling for a while for that 1240, 1245 support level to probably be tested. If that happens this summer, wouldn't surprise us at all. To the upside, what are you looking at resistance-wise, Robert?
Low 1300s on gold. It needs to get back above that psychological level. Right now, gold's putting in higher lows as it's bouncing above this 1270 level, so it's positive. Nothing says that we're actually going to see the mid-1200s like what we've been talking about. I hope we do. I think we probably have some people who are sitting waiting for that, and we don't want to tell you to wait too long because you should probably set a boundary on the top side, meaning that if gold does continue to bottom here at this 1270, 1280 level and then move higher into 1300, 1305, 1310, it starts to go away from you pretty quickly, I think, heading into the seasonal strength that we typically have. Doesn't have to happen that way in the late summer, early fall. So I'd put a boundary on that upper side because it's showing strength here without going down.
So like if you dollar cost average in, for example, I mean, does this not make a great entry point for position number 1 of 3, for example? Then if you do get that correction, you take position 2 and or 3. If it runs away to the upside, you just don't let it get away from you.
Yeah, I think I would just say buy on weakness, any weakness that we see here.
So what about silver then? Speaking of weakness, you introed the show that way. Again, flat trading really. Over the last 6 weeks, we've seen 2.5% volatility. So 1428 on that downside, 1462 to the upside. Miles wanted to make sure I brought up the point that he drew that trend line in this chart that you'll see here at around 1437, and we have continued to test that, although now we just broke below that. We're back up above. He really feels strongly that silver wants to try to come down below that 1437, and it just can't. Are we going to see it? Who knows? But ratio-wise, we're sitting there at 89 to 1. That's a 26-year high.
Moving to platinum, platinum has been a good buy for a while and continues to get to become a better buy here, below 800 on the spot price. And I'm not even going to try to take a stab at where platinum turns around. It can be pretty volatile because of where it comes from and supply-demand issues there. But things to know about platinum, I think, would be that there is a group that was formed a few years ago that is addressing platinum and encouraging an investment demand into platinum. Platinum demand in the last few years has only accounted for about 2 to 10 or 11% of the total platinum demand. And so this group is trying to increase platinum investment, which I think would be positive for the price of platinum. I think it has to be, especially with considering you're probably going to find some new uses for things like platinum, palladium, like they did last summer with palladium.
As long as it's at such a discount. I think
Absolutely.
That's right.
Yeah. It's easier to research something that's using a product that is $800 versus something that's $2,300 like platinum was. So a little easier to do some research and play with it in the lab.
Palladium, meanwhile, is still 15% down from its high. Platinum is giving away most of its 2019 gains, and that's okay. 780, somewhere in there, we ought to see a return to that original base, and we'll see what happens. And technically, though, we're getting into that summer doldrums, if you will. Just listen, and we'll give you entry and exit points as you go to add to your ounces this summer, and we'll keep you posted on the ratios as well. How about fundamentals? Okay, we often talk about the technicals here, but there are fundamental reasons when gold really turns. The precious metals can see this volatility in trading ranges, but how do we go parabolic? That happens from fundamentals. So specifically in regards to those fundamentals, really all eyes are kind of on the Fed, undeservingly so, because it's a European central bank that's under all the pressure right now. And the Fed's talking about, the increased odds of a rate cut here domestically. But that's all just trying to help, again, weaken our currency. But in terms of the European woes, all you have to do is look at Deutsche Bank. So Sinclair had a great article last Friday. Actually, he gives all the credit to the renowned geopolitical and financial cycle expert Charles Nenner, who points out the fact that the canary in the coal mine of the financial system, so not just Europe, but certainly it's Germany's issue, but globally, it's Deutsche Bank. Okay, and he warned at the end of 2018 that if the Deutsche Bank stock, DB, went below $8 a share, we should be worried, right? Well, guess where it is today? $6.91. He warned on Friday that when it was at $7.19, if it continued to come down to $6.40, that's a critical tipping point. And that's critical, and it's a very, very serious situation because why? Think Bear Stearns. Think Lehman Brothers. Like, what happens to the European economy when Deutsche Bank does get below that tipping point of around supposedly 640? You get a daisy chain of default, not just throughout Europe, but throughout the world, just like what we caused in 2008 with the failure of those two banks. This is a really dangerous situation. It's not the only one. They're just the one that are getting exposed. I think if you look at the balance sheets of other banks, especially European and Italian banks, you're going to see a lot of trouble signs right now. And, you pointed out the dollar strength earlier, the 2-year high. The euro's at $1.11. That's also a canary in the coal mine.
Speaking of Deutsche Bank, I was curious as you were talking and pulled this up here about some of their ETNs, not ETFs, ETNs. ETFs would be an exchange-traded fund. ETN would be an exchange-traded note. They're backed by Deutsche Bank, and they run, looks like 16 of them. They delisted 12 of them on April 11th, about a month and a half ago. Looking at their share price, if you look at a long-term chart of it, where's that high, Tori?
Yeah, let's put up a 15-year here. And you'll see that they were at $140 a share back before, the economic crisis really got legs. But that doesn't even do it justice. I mean, it just disappears into an immeasurable
Yeah.
bottom right corner.
Trend is clearly down. Even the bottom there in 2009, I guess that would probably be March 2009 when the whole market bottomed. It doesn't even look like it got down below 20. And today we're talking about a $6, $7 a share price on Deutsche Bank. So it is 1/3 roughly the cost per share as it was at the absolute bottom. So talk about a crisis. There you have one. And if you zoom in a little bit more on the Deutsche Bank chart to a 2-year, you see the trend is clearly down and continuing down. And, it does bring up the days of Bear Stearns, Lehman Brothers, when we were here watching that happen. And AIG, another one.
Great point.
I mean, AIG just doesn't seem like, and maybe this is my own perspective, it just doesn't seem like that got as much news as it should when you have one of the largest insurers in the world going bankrupt and needing a bailout. If that happens again with one of these huge financial institutions, then does the government, our government, the European Union, do they bail these people out, these companies out? I mean,
I think they have to. The Fed got a lot of flack, did they not, for letting Bear Stearns and Lehman Brothers go under? Will the European Central Bank step in? I think that's absolutely the question, because you've got a share price here that's down 95% from peak to bottom. Now we're 50 cents away from supposedly this pivotal $6.40 trigger point, but that's their earnings per share is negative $1.12 right now. And I think that's why, Nenner's saying, look, this is critical juncture here, that we are on the verge. So will the ECB step in? I would imagine they're going to have to try. But looking at this chart, keep in mind that this is all along with economic stimulus from the European Central Bank. So why is Deutsche Bank important, right? Well, it's important because, again, it creates a domino effect. Remember, there are derivatives, and I know that's a complex word, but there are bets on bets on bets that become a real contagious systemic problem for the world economy. And if Deutsche Bank goes under, it's going to have a trigger effect on a bunch of other ones, okay? So that's the key piece of news. To me, it's already being reflected if you look at global trade year over year. So we'll put up this chart on advanced economies and the trade direction statistics.
Boy, that is a good chart. I mean, if you're
scary.
still listening today, take a little snapshot of this chart and send it to a few friends.
This is going to tell you, what is the world economy really doing, all right? Quit reading headlines and start digging a little deeper. And this right here is exactly why you hedge in your portfolio. This is when you're adding to your ounces of your metals, and maybe you're taking out some short positions in the equities markets, or some inverse ETFs, whatever that is. But Ford slashing 7,000 jobs is just the beginning.
Related to that global trade chart there, we've been hearing a lot of people talking about how this year it's going to unwind with a financial crisis and a crisis in the stock market. There was one yesterday talking about how it was going to begin this next month in June, July. We don't like to put a lot of weight on someone's prediction about exactly when something's going to occur and all that, but we will say there's a lot of risk out there. And that global trade chart is identifying that we're already kind of in the thick of it. So be cautious being invested in the stock market. We have some solutions that I think make a lot of sense for the timing of where we are now with the stock market near all-time highs, looking like it wants to roll over. And how do you protect yourself? How do you take some profits off the table there and do what? We have some solutions, and if you want to, we'll send you this report. So give us a call, 800-525-9556. You can follow us on Twitter at ICA Gold. Like us on Facebook, McIlvaney Financial, and find anything you want on our website, McIlvaney.com.
We'd love it if you'd click the subscribe button below. And again, give us a call at 800-525-9556. Tune in next week and have a great one this week.